Welcome everybody to the ARMR Report. This is Friday's version, which we always do, the week in review. I had a lot of fun things to talk to you guys about today, but obviously there's been a Trump tweet, and so everything in the world has just changed. But we're going to get to that in a bit because it still kind of plays into an issue I want to discuss with you. So today we're going to go over our precious metals outlook. We're going to talk a bit about our cannabis investing theme. And I'm going to round it out. Of course, I always start with what our algorithms are telling us about the big indexes and how we should be managing our risk. And then I'm going to round it out with a thought. Today is a very poignant day for this thought, actually. I didn't know this was going to unfold in the last half hour with another, I don't know how to define a Trump tweet. Idiotic? I don't know. I'm a Trump fan, whatever. I like a lot of things he's done for, the economy, whatnot, since he was elected. So it's not that I'm a big Trump hater, but I certainly got to tell you that putting out a bunch of inflammatory tweets on Twitter is starting to grate on my nerves and that of the rest of the market, as evidenced by a 400-point reversal in the market in 30 minutes because Trump makes tweets about China. Hang on a sec. This is a live trading desk. Sometimes the phones ring. Don't go away. Talk to me. No, sell it. Yeah, hit the bid. Okay. So before I jump in, let's just go over again. This is the ARMR Report, Algorithmic Risk Management Research. I'm Brett Rosenthal. It's a show about stock market investing. I'm sure you guys know this by now. Live trading desk. I'm sharing information with you I use to manage my own assets and that of investors that I work with through Interactive Brokers. This is an educational show. I'm just sharing with you my thoughts and how it affects my investing and trading activity. I hope that I can share with you my 30 years of experience and that it'll help improve your performance in the market and how you manage risk. Truth be told, this is a very difficult day, very difficult week, even for me trying to manage risk, even using algorithms, because the volatility has gone berserk again in the month of August. And it's very hard to use an algorithm that's statistical based, which is what I do, which works over decades. But in the last, month or so, or in a particular month here and there, when you get a tweet from a president that's incredibly inflammatory, everything that's going in the right favor of what you think is happening just completely unwinds in a heartbeat. And I'm going to share with you why it happens so aggressively later in this call, because it's very important for you to understand that AI is driving market volatility. Program trades are driving market volatility. The crazy sell-offs you see, or insane rallies, more than 50% of that volatility has nothing to do with fundamentals and everything to do with algos, crawling news wires, changing gamma, using index options. I'm going to explain that later. All right, let's just do a quick roundup. As you can imagine, I got a lot I got to deal with on the desk today, depending on how the market closes. So I tried to tell you guys earlier in the week, look, we have a risk-on opportunity that presented itself, but it was a bit muddled. I promised that I would send to ARMR Report subscribers. You can go to my website to subscribe to the ARMR Report. It's a free subscription service where I send out emails to you guys when something important happens I think you really have to know. And so I told you I might be sending you one on the market if we were all systems go, let's get aggressive risk on. And I haven't sent it because we have a muddled picture. We have the S&P, the NASDAQ, Momentum Index. These things are telling us it's time to get long. And then we have small caps and the leadership sector like the IBD 50 and the Dow telling us you can't put money to work. So when we have that conflicting situation, I can't get aggressively long, but I have to get long to a certain degree. And if we'd had this conversation literally at 10:30 instead of 11:30, you would get a completely different conversation from me right now, because that would be pre-Donald Trump crazy China tweet, crazy Fed tweet. And I really don't know how to work that into my algorithms. All I can use is, obviously my stop losses, any positions I have on today. If the market ends up here, I'll be completely out going into the weekend. And I'll be taking a loss, guys. It happens. The object of using our algorithms is that they increase our probability of success. They don't guarantee success. So there are times I put capital out and I have to immediately take capital off. For whatever reasons. It's the reaction to the news that matters, not necessarily the news that's occurring. So the market's imploding right now. And so it's going to change our stance. By the end of the day, you can look at our website, Rosenthal Capital, and we'll be back to 100% risk off if the market ends up anywhere near these levels. Okay? We're focusing on gold. This is a week in review. Please go watch Wednesday's video. I lay out for you the reasons why we have to focus on precious metals. And today, of course, just to add a little flavor to precious metals, when the market's imploding, gold and silver go up. So gold's up 2%, silver's up 2%, precious metal stocks are up 3 and 4%. So when the market implodes, people run and hide in those stocks. Okay? Wow, this would have been a completely different conversation an hour ago. It's unbelievable that we get a tweet like that and the world falls apart. So this is going to force me to make this short. I have too many things I have to deal with. And this is just a live desk. I'm giving you a free look into how I deal every day with market behavior. And some days are more fun than others. And this, let's be honest, this is not a fun day. We get the Fed chairman talking at Jackson Hole, walking a very tightrope line, and in my estimation saying exactly what he needed to say to allow the markets to drift higher into September, when the ECB has already come out and said we're going to be adding liquidity more than you think. So at the end of the day, forget about all the intraday hysteria and Trump tweets. At the end of the day, we have lower interest rates around the world. We have $16 trillion worth of negative yielding bonds. 16 trillion, right? I told you guys on Wednesday we have a bank in Denmark giving people money to buy houses, and at the end of paying off that house, you're paying less than you're borrowing, which is insane. So in a world like that, money is gravitating towards dividend-paying assets. And we talked about that on Wednesday. It's gravitating towards gold and silver now, finally, after a decade of underperformance. And so none of that changes. So even if the market rips lower on a Trump tweet and everything goes crazy and I say risk off everywhere, what I mean is risk off everywhere. So you as the investor say, okay, what positions do I want to hold through this sell-off and which ones I don't need to hold? How much cash am I willing to have in my account? It's time to go back to that cash. I don't know if that's going to happen. It could by the end of the day. And certainly the way it's looking right now, this market is done and it's going to implode the rest of the day. Because that's just the way the market behaves. And I'm going to get to why in a minute. I don't know that for a fact. There could be another Trump tweet this afternoon. Who knows what he's going to say? Stock market could rip higher on that. I don't know. This is a very, very difficult environment to manage money in. It's not difficult to hold stocks that pay us a fat dividend because they're outperforming. Even though they're down on a day like today, over time they're outperforming and we're collecting that yield. And that's why I've been trying to help you focus on that and stay away from riskier assets like cannabis. Now, I love the cannabis space, so let's talk about that for a minute, okay? You need to go watch my video a few weeks back when CanTrust revealed that Health Canada was investigating their facilities. I did a bonus coverage for you guys. Go to the Cannabis playlist on YouTube. Rosenthal Capital, you can go to ARMR Report Cannabis playlist, scroll down, you'll see bonus coverage CTST. Watch that video. I told you that day that the space was dead, that it was a major problem, not a minor problem, that the way institutions run money, the minute they discover a big guy in the space might be doing something fraudulent, they're going to sell everything. Now, I had been telling you guys way before then, we don't have a lot of cannabis in our portfolio, right? We had cannabis in May, we got whacked, we got raised cash, hit our stops. Doing our research, we love some names, but we're not buying them. And then when that CannTrust story broke, I said, guys, you've got to get out of this position. It's going to get ugly. Well, it gets uglier and uglier and uglier and uglier every day. Does that mean that I don't think cannabis is a great investment theme going forward? No, it doesn't. I can't wait to buy these stocks back. And when a group gets crushed like this, it shows us the cream that rises to the top. Without a doubt, Charlotte's Web is the best stock in the space. Just go look at the chart pattern. And I've been trying to tell you guys that for months. And the reason's simple. It's the only stock in the space that's actually attracting institutional money. They're not doing something illegal, right? They're selling CBD made from hemp in the US. It's a consumer packaged good. I don't have to repeat myself again, I don't think, but maybe there's some new viewers that want to hear this. Charlotte's Web's got an incredible management team. Guys from Johnson & Johnson, women from Kellogg's, guys from InBev. They've all come in the last 6 to 9 months to take this company to the next level, and they're doing it. And the stock price reflects it. Is it at all-time highs? No, because the whole group's getting killed. But it's performing much better than every other stock in the space. Because it doesn't have any of those other problems. It doesn't have Canada problems. It doesn't have legality issues and not really legality. The problems with U.S. MSOs right now has nothing to do with their fundamentals. It has to do with the fact that no institution can buy the stock. So all you have are retail investors getting killed everywhere else and dumping everything. The only stock that's attracting institutional money, Charlotte's Web. And that's why that stock price holds up better than most. Now, look, it might come crashing down in the next couple of days. It can't stay up forever. If they keep killing the space, the stock market rolls over and implodes, the stock will come down, and I'll look to buy it. But I'm just highlighting for you, you've got to look at how that stock trades and understand I've been trying to share with you something I've learned over 30 years in the business. No matter how great the investment is, you need institutions buying the asset to have long-term capital gains. And simply put, the U.S. MSOs can't have institutional sponsorship. Now, when marijuana is no longer Schedule S1, then the spigots will open. And that's why we keep doing research and high grading our favorite stocks, putting it on our whiteboard so we know where to go when things change. Right now, we're not buying the stocks. But without a doubt, TRUL is the best MSO, bar none. Here's a statistic for you guys to chew on. TRUL has pulled more revenue last quarter out of Florida than Canopy Growth did out of all of Canada. They're killing it. And they've been killing it, and the stock keeps going down. This is why you need stop losses, guys. Just because you might be right on the asset, right on the fundamentals, just because the company might deliver, the stock can always keep going down. So you got to protect your assets. That's the ARMR Report's all about managing risk. All right, let's move on. Just let you know, I love the cannabis ideas. I love that they're getting killed. It's going to come right into my breadbasket. At some point, we're going to be out there buying these stocks. When we are, I'll let you know. I'll be sending an email to all of the ARMR Report subscribers. So go to the website right now and subscribe. It's free. But get on that subscription list, because when we start putting capital to work, we'll let you know. And at the top of the leaderboard, Charlotte's Web, TRUL. Now, I'm going to wrap up today because I just there's just mayhem going on, so I got to pay attention and deal with it. But I wanted to be here for you as I am every Monday, Wednesday, Friday at 11:30 to noon. I want to share with you, and this is particularly poignant because of today's action. JP Morgan has a great quantitative analyst. Whenever you get a chance to read his reports, read them. He described using quantitative analysis what occurred on August 14th when the market dropped 3%. After doing the quantitative analysis, there was $75 billion worth of programmatic trading, which is algorithms, which is AI, which is systems that trade when A and B and C occur, the system executes regardless of liquidity and price. Particularly in the equity index options market. Very illiquid, changing what they call gamma, rearranging their risk management, but doing it on a very aggressive scale in a thin market in August. And so less than half of the decline that day, market was down 3% that day, less than half that decline was fundamentally based. Now, what they tell you on financial news media that day is the market's plummeting because the yield curve's inverted. Okay? That's not really the case. I mean, that's a part of it. But the thing is, the way money is managed today, over 90% of trades on the exchanges are algorithmic based. That's a fact. If you guys don't have algorithms to back up your decision-making process, you're bringing a knife to a gunfight. If you don't understand how the markets work, it's going to negatively affect the way you manage your money. So there's mass hysteria on the 14th because the yield curve inverted. But what that really did was when that news hit the tape, a bunch of algorithms like dominoes started to hit the equity index options market to change their gamma, okay? And as they did that, it exacerbated the problem and things imploded. No doubt that's happening again today. No doubt. Trump has been tweeting about China and the trade war forever. And you get these days where the market implodes and then the whole thing blows over. And that makes it very hard for us swing traders out there, because if the market closes like this, I'm blown out of my positions. And then I have to reassess and step back up next week or the week after or the month after when the next opportunity shows up. And all because of a Trump tweet. It's very disturbing when it comes to trying to manage swing money. Not my conservative money where I'm collecting dividend yield. That's okay. Drive it down. I'll buy them cheaper, add to that part of my portfolio. But for the risk-on part of my portfolio, I mean, this Trump tweet's a disaster. And then the added problem of an illiquid market in the middle to late August with a lot of algorithms trading on news bites causes this massive volatility. How do you handle that? I really don't know. I really don't know. I mean, there's two schools of thought. The minute the news hits, you just get out of Dodge and dump everything. Okay? Or you make your way through it. You wait for closes. You wait to see it wash out and where the market ends up the day. And while, that certainly is the more prudent thing to do, because you can't just bang out of everything every time there's a Trump tweet. The way this market's trading right now, it's dropping 2-3% in an afternoon. The whole market. Which kind of leads us back to what I talked about at the beginning of this show, which is we didn't really get a risk on across the board with all of our algorithms. We have 6 indexes we follow, 2 of which told us risk off. On June 4th, when I put out an ARMR report and sent it to my email subscribers, and I spoke to you guys about it, I said every index just gave us a risk on at the same time. And the market skyrocketed for 2 months. This time around, a muddled view, and we're getting a muddled response. where it looks like the market's going up, then the market craters, and the market looks like it's going up, then Trump makes a tweet, the market craters. So something's not right about the market. That's why I did not send any of my subscribers an email telling you guys to get aggressive. Okay? So to wrap up, we'll see where we close the day. Sometime between now and the close, it's going to definitely change the way I'm positioned because I did put risk out. Not massive risk. I didn't go as aggressive as I did in June, but I put some out. So I'm going to have to reverse that. It's not going to affect my dividend part of my portfolio. I'm going to keep collecting that yield. Because if anything, the worse the trade war gets, the lower rates are going to be going around the world. So over time, the dividend payers will attract capital. All right. I hope this has been helpful. It's been frustrating for me. I had a completely different conversation lined up for you guys when I started to put this together at 10:30, so this was insane. But anyway, have a great weekend. Be safe out there. Error on the side of protecting capital. Don't worry about whether or not you have to get back in next week. That's just the way it goes sometimes. Okay? Protect your capital. Reassess if you have to. We'll see where we close the day. All right, guys. Take care.